The broadcast is now starting. All attendees are in listen-only mode.
Good morning. This is Roger Royce, the founder of the Royce Law Firm, a business, corporate, and tax law firm with offices in Northern and Southern California. So for this week's webinar, we have a very special guest, which is Sana Chowdhury. She's the CEO and co-founder of Yetizen. It is a cornerstone of the game developer ecosystem. They have an accelerator program and an innovation lab. And today's webinar is on gaming and gaming venture investment. This is a topic of both local and international interest, of course, and we're fortunate to have Sana here to give us her perspectives on what the market is like. She's a leading member of Women 2.0 and Startup Weekend. She's the co-founder of New York City's largest entrepreneurial group, Ultralight Startups. And in addition to Yetizen, she chairs TIE SF and TIECon Youth, which is the world's largest entrepreneurship conference. You'll find her on the Yetizen website as well as on her blog site. So Sana, I'm going to go ahead and turn it over to you and let you kick things off.
All right, thanks so much, Roger. So good morning, everyone, or good evening, wherever you are in the world. The presentation today, in the past, I've given this talk before and called it the truth of the 2012 game investments. But there was an incident last night that made me change the name to Getting Past the Bullshit About Gaming Investments. And we'll talk about that in a little bit. But before that, quick agenda on what I'm going to be covering here. So where I'm coming from, just so you know what perspective I have and why I say the things that I say, whether or not you should be worried about investments, some myths debunked, and what you should do if you are a game startup raising funds or considering raising funds. So quickly, where I'm coming from. So I had an undergrad in business with a focus on business strategy. I worked as an in-house analyst for many years in old world businesses. And then, as Roger mentioned, I ran New York City's first entrepreneur hub called the Ultralight Startups. So with a focus on business model coaching, navigating the investment landscape, training a lot of entrepreneurs. I think in the last 2 years ago, we reached about 700 companies that had actually pitched at Ultralight Startups. So quite a hub of all things happening in the startup world, particularly with a focus on consumer web. In the last 4 years, I've been in games, and my biggest accomplishment to date within games has been this company called Yetizen. So Yetizen has two arms, the Yetizen Innovation Lab, which is by day an open co-play space for anyone in the game industry, and by night it is an event space for game developers. In the last year, we had about 6,500 developers go through our own events, which is not counting all the partner meetups that we do. All in all, there's something like around 150 events that we do to help develop and educate the game industry at Yetizen. And the second arm of Yetizen is the Yetizen Accelerator Program. So every year, we have 2 rounds a year. Each round has a little over 700 startup applications, and we have chosen in the most recent round 8. So you can get a sense of the quality bar. It has to be really, really high, and the startups have to be very, very competitive in order to get in. We also have some really well-known investors in the gaming VC community on our board. You probably recognize some of the pictures here. I'll just call out a few. So there's Ankur Jain from Bloomberg, Ping Wei from Excel, Tim Chang from Mayfield Funds, and Phil Sanderson from IDG, who I think already this year has done upwards of 5 or 6 investments as a venture capitalist in games. So last night at the Yetizen Road to Success event, it was focused on creating communities. It was an event for people to think about, pre-production issues and how do you think about things from a design standpoint. I ended up talking to a very interesting company and asked them, hey guys, so what's the goal from here? Are you planning to raise money? Do you plan to sort of build towards an exit? And I got things like, that's hard. Very few companies are actually able to raise. There's so many more that fail. No one really invests in games anyways. And I was a little shocked because I've given a talk like this at Yetizen before and felt people should know different and know not to get very involved in a lot of the things the press puts out there about gaming investments, which is absolutely not true. So I decided to change the title for this talk to Getting Past the BS. So that's the story behind the title. So should you be worried by what the media tells you about gaming investment decline? Here are some stories that came out a little recently. M&A hits a $4 billion record in 2012, while social gaming investments plummet by $1 billion. This was on TechCrunch in January. Then on VentureBeat, there was another post called Game Acquisitions at a $4 billion new record, but investments tumble 57%. And then, of course, a little while after that, in February, another post on VentureBeat saying, after Zynga's crash, game investments died 42%. Well, the answer is no. This is all BS. You should not be worried about game investments. Game investments are fine. So let's take a closer look at the numbers and see what actually is happening. So these numbers, when they're looking at investments, are counting seed, Kickstarter, first venture rounds, as well as follow-on venture rounds. So it's a little bit like comparing apples and oranges, because each of those different types of investments are going after a very different part of the market, and not always with the same investment hypothesis, right? Let's talk about that a bit. When you look at seed and Kickstarter, it is mostly individuals who are betting on that investment, that game investment, because of a passion for the game or the team. It's momentum driven to some extent, particularly on the seed end. So if you see a Wall Street Journal article saying, oh, app developers only make $3,000 in the life of them developing apps, all those big sort of guys who are following this and, we're getting excited about games and the passion of it, they don't invest in games anymore. That's why seed goes down, right? Kickstarter is often a result of passionate end consumer-facing game design brands, right? So if you look at Double Fine, Tim Schafer, he had a 12-year career, and a lot of people playing his games knew who he was. It takes an entire career to build that type of a passionate following, and once you do, raising on Kickstarter makes sense. Just for a stat to help clarify this point, if you look at all of the Kickstarter campaigns within a year, about 50% of them get funded to the completion of the goal that they put out there. When you look at games themselves, the number drops to about 23%. I would say it's because all of the guys putting their games for investment on Kickstarter, very, very few of them are big game design brands that are consumer-facing, like Tim Schafer from Double Fine, like American McGee. All these folks, there's about a handful of them that have those big game design brands. If you're one of them, definitely put your game on Kickstarter and look at that as a funding route. If you're not, and you want to use it just for marketing, do it for a small amount, but do not consider it a real fundraising source. And obviously, when media ends up looking at numbers like seed and Kickstarter, that has gone down because it's momentum driven. Follow-on venture investments. Now, to anyone outside of games, the fact that any journalists within games had actually counted this in the investment number is a big, big shocker. It just shows a little bit of mental laziness there, right? But for some reason, we in the game industry haven't called out enough journalists on this, so this mistake continues, and it will continue for years on end unless we raise a big human cry. Now, here's why you don't look at follow-on venture rounds. If you're looking at a company achieving growth milestones from the money they raised in their Series A financing, and deciding, whether you should invest with them again, which is the definition of a follow-on venture round, you're not looking at the same investment hypothesis as, oh, our game's hot right now. Is this particular game a game investment hot, right? And so it's usually, in the investor's mind, a match between the performance of prior investments and whether that actually matched with their investor expectations. It is a very, very bad indicator of the investor appetite for games in general, because it is much more centric on the team itself and how the team performed based on the money they gave them previously, right? So what we should look at, the answer should be pretty obvious at this point. It's only the first venture financing. So in the definition I'm using here, it counts the first venture round plus any second round that happened in the same year. The reason for the second part is because for press reasons, there was a couple of companies last year that did their first venture round and their second one within the same year, like almost 2 months apart or so. But it overall was still that first venture round. It wasn't really based on, hey, follow-on performance in those 2 months. It was more of a press reason to continue being in the press, right? First venture round financing ends up being a true apples-to-apples comparison. It is very driven by hypothesis. And by looking at it, you get a sense of what were the investor patterns and traction, what kind of social proof were they looking for with the companies that got funded. You get a much better picture on what is actually happening in the game investment landscape. So let's dig on some more BS, right? These are some truths gleaned from the actual 2012 investment. The first BS line, lots of you have heard it if you've ever tried to raise money particularly from venture capitalists. The line is, I only invest in picks and shovels, i.e. the platform plays, the tools and the services that you provide to game developers. I don't invest in game studios because I dislike the content risk. Now, if you look at the numbers, this is the type of game investments in 2012 split by what is a platform play, the picks and shovels, and the game studios. The game studios, from a number of investment standpoint, actually did a little bit better. Second BS, right? There are few green pastures for game studios. There's a lot more left for platforms as gaming matures. So if you're running a studio, I may not invest in you because you just don't really represent a big opportunity for a big business that's going to do really well and I'll get my money's value back. If you really look at the numbers, by percentage of investment in 2011 and 2012, game studio investments have gone down, right? A 23% drop in 2011 versus 2012. But if you look at the dollar value of the investments, it's gone down, but not as much, only an 8% drop. If you look at the average deal size for game studios, it has actually gone up from 6.79 million to 9.64 million. So what the numbers really show is that while there have been slightly fewer investments in game studios from 2011 to 2012, proportionally, the average deal size has actually gone up. So what should you do if you were a gaming startup? If you're raising, if you have social proof, that is past exits, whether you've had C-level or early employees of a famous startup like Angry Birds, I don't know, use it. It may still not work. If you look at those who did get first venture round financing in 2012, the majority of them did not get it because of social proof, but actually got it because they had some great success from a traction standpoint on their games. Which brings me to the second point. And this is for both those of you who don't have social proof as well as those who do. You have to focus on DAUs, the ARPDAUs, and the right level for that, that's a moving target. It's very genre dependent. It keeps moving. Essentially what you need to keep in mind is that for your space, what are the metrics that your other similar competitors or closest comparable companies are achieving? That's the prism through which investors view you. Because, if you're going for, say, social casino right now, they know what the DAUs, ARPDAUs are, and they also know what the average user acquisition is for other companies. That's what they're going to be comparing you to. How do you actually break out and actually show success compared to that? The other thing to keep in mind, particularly for those of you that are considering raising, is that oftentimes what I find is that startups are speaking to the wrong level of investor. An investor is always going to take a meeting because you will present an opportunity to learn. But that doesn't mean that they're ever going to be likely to invest in you. And here's why, right? If you look at startup lifecycle phases, there's discovery, validation, efficiency, and scale. Every startup that has success goes through some version of this. In games, discovery means the level when you're thinking about the game, right? And what you're going to be making. Validation means when you actually end up making that game, putting it out there in the market, getting some initial numbers on the fact that users actually like you. Efficiency is when you've actually figured out how you're going to do customer acquisition, retention, and monetization, and it's all about increasing the efficiency at which you do it. Maybe you acquire users a little bit cheaper. Maybe you figure out a way to monetize them a little bit better. And scale is what the word sounds like. You basically improve and increase your ability to actually do all those things in the last few phases much more cheaply and doing it with larger and larger numbers of users, right? The stages for when a venture capitalist comes in is actually at efficiency and scale. They never, never, never come in before that. The only exception are the handful of micro VCs that are out there, which generally will offer you a bad deal because they come in, they take a lot of control, and they dilute you significantly. And if you've had any other investment before that, that's going to give those investors a bit of a hard time as well, right? So venture generally comes in at efficiency and scale. So after you show some traction, and that traction follows suit with what they expect of your particular type of game genre or game platform play, that's when they come in and invest, which is also why this is a lot more hypothesis-driven, right? You have a hypothesis and you have numbers to show whether the company is hitting that hypothesis or not, right? Discovery and validation stage is when passionate angels, friends and family, seed, again, if you're a consumer-facing game design brand, Kickstarter, that's the stage at which those guys come in. So it's very, very important for entrepreneurs not to get this wrong. A lot of the frustration I find in raising money comes from getting this wrong and wondering why on earth, after lots of meetings, lots of time wasted away from the product, they actually haven't been able to raise money. Well, this oftentimes is the reason why. I'd say in about 80% of the conversations I have at the YetiZen events, people complaining about fundraising, they were basically talking to the wrong level of investor. So if you are at deficiency in scale and are considering raising, you need to arm yourself with the right knowledge, the right mentorship, the right partnership deals that helps you get whatever money you do have to extend a lot further, and a way to separate yourself from others with less traction or less self-awareness of where they fall within this great investment landscape. So talk to us, email me directly. Love to hear from you. Always like meeting more startups and seeing if there's a fit. We might be able to work together. If not, I might be able to point you in the right direction anyway. Also, if you want to connect with me at the YetiZen.com blog. I also tweet quite a bit, although a little less recently. We'll be upping that again very soon. Or email us at info@YetiZen. So after that, I'm happy to take any questions. Do you have any?
Thank you, Santa. For the audience, there is a question dialog box on your screen. So if you have questions, go ahead and type them in, and I will relay them. So one question we had is somebody asks where the data comes from that you've cited in your materials. Do you have a source for some of the statistics?
Yeah, so there's an investment firm called Raymond James. Raymond James has access to a pretty exhaustive database of all the investments that have happened around the world. The way this was sorted on their end was it was actually pulled from the keyword consumer web, and then after that, my team and I went through investment by investment of 2012, actually sorted those by game platforms, game studios, took out everything that was not really a game company. So we took out everything that was gamification because we didn't want to consider that for this analysis.
Okay. And I'd like to remind the folks that we are going to be saving this webinar as a recorded webinar on our site, royceuniversity.com, and the slides will also be available. Or you can contact Santa directly at the contact information on the screen if you'd like more information. And I assume you'll make the slides available for folks.
Yes, and if you go to our blog right now, the earlier version of this talk is also there on video, so you can catch up with things there. Another good place to look at would be the VentureBeat post on gaming investments, which I can send you the link to, and you can disseminate it as well, Roger.
Okay, great. So one of our listeners indicates that they're a smaller studio. Second here. My mouse is really. And they recently launched their first product. So they view themselves as being between validation and efficiency on your scale. And they're asking, what's your opinion of the kind of investor that you would recommend for them?
So I would, so the order in which I would ask questions if we were talking real time would be, one, what's your run rate with your current, sort of cost structure, right? The position at which you as a startup have the most leverage is when you actually are raising money, not because you need money for survival, but you need money for scaling, right? And so if you have a run rate or some other situation, maybe with Bootstrap, with other sources of revenue, where you can continue to remain at your level of launching that game, making sure you can get those metrics tweaked and get to that learning and get to the point where you are at efficiency and scale, that's the best possible scenario ever, right? You need to keep doing that. It allows you to focus on the product, build things there, rather than end up wasting a lot of time with investor meetings and the whole sort of show that comes there. That being said, if debt is not an option because you don't have those types of savings or the team can't survive and you need cash for survivability, the option for you would be angels, right? So this could be anything from friends and family to other sort of high net worth individuals that have known you for a while, believe strongly in you. It's all about being creative and figuring out who those options would be. I've had startups where dentists and oncologists have actually invested in them because games were a passion project for them. It is akin to what used to be which used to be for a lot of people with cash, this whole, putting money into movies, right? So if you can find people who are passionate about games and they have some cash, those would be your options. But again, what I recommend most is if you can figure out how to remain independent from a run rate standpoint, not have to raise money, and continue sort of basically developing the game and product while getting to cash flow positivity, that's the best possible scenario. It shows a lot of chutzpah as an entrepreneur. It shows a lot of forward thinking, and it puts you in the best situation when you are actually at that efficiency and scale venture point.
Okay. What kind of games do you think are most likely to get funded these days?
Actually, that's I'm going to say it's it should be a more nuanced question than that. It's not about what kinds of games will get funded. It's about what the metrics and the traction looks like, right? So you could have, social casino, really hot right now. You could have made a game with that. But if you're getting very, very low 7-day and 30-day retention, you're not going to get funded, right? Whereas you could have something which is a casual game, and everyone's like, oh, there's so many casual games out there. Why is this still getting funded? Well, maybe that game has long gameplay. It has a lot of frequency of engagement. It has great retention, and it has, a great sort of monetization hooks in there, which means that, hey, you get 30,000 users, those guys are monetizing really well. The VC thinks, great, if I actually put in a lot more money and I help them scale that to hundreds of thousands to millions of users, they're going to monetize even better. So that's really the important thing to consider. It's more of how you perform on the metrics, and rather than what particular game it is out there. Right?
Okay, I see. So I guess stepping away just a little bit from the investment side, we have a question about how you see the maturation of the gaming engine market. Any comments on
so
that?
is this, so I'll answer that, and perhaps if the same questioner can explain from an engine standpoint what that engine's doing, because it's very, very specific based on that. But in general, I am in this whole, I call that entire category, right, platform plays, right? And in terms of platform plays, I'm a lot more excited about platform plays that are that are helping developers post-launch of their game, whether it's with customer acquisition, with retention, with monetization, than I am at anything which is a production tool. And there's a reason why, right? Production tools take a lot more money to get to a point of success and get to that, get to all the developers that are needed to show that, hey, this is something unique and new that a bigger company like Unity is not going to be able to do much better than you by throwing a lot of resources at it, right? There's very few opportunities like that, I believe, that are still left in this particular time in the market. There are some exceptions and that I've come across in our last few months of screening for 380Zen companies. So one company we've taken in our current round is a company called Playblazer. What Playblazer does is it actually allows you to make any single-player game a multiplayer game within weeks, and completely takes away your server-side engineer costs and everything else related to that. Now that's something relatively, unique. There are some big companies that have it internally that have spent 9 to 10 months building that. So the Zyngas of the world would have this. Some other bigger companies who've been thinking about multiplayer for a while would have it. But in general, it's not something that's available to the long tail, to the mid-tier game developer, right? I also don't see that as a particular type of market that some bigger company would want to go for, just because it's a different type of investment, and Playblazer is already there. So that's one exception. But in general, I end up needing a lot of HTML5 engines and other things like that. I'm not convinced there's still an opportunity for that in the market. But that being said, I'd love to meet entrepreneurs who give me the sort of the traction and the metrics and convince me otherwise, because that's how I learn.
So following up on that, for these platform plays, how do you define when you have validation and it's time to scale up?
For the platform plays, so basically validation for a platform play is you have a product out there that developers have actually adopted. Now, the level of developers that you would look for initially would not be the biggest developers out there. It would actually be some long-tail guys and then some mid-tier companies, right? And by mid-tier, I mean those who may have gotten some amount of funding, have gotten some successful games out in the market. If they're using you and there's case studies showing that your platform has actually been successful in helping them solve their problems and actually perform better than they would without you, that's the point where you've gotten some validation. From there, it's all about doing that process a little bit more efficiently. How do you basically build up on marketing to developers and getting their attention and getting some more of that out there, and then scaling is when you actually now are going to all ends of the market and you have a self-service type of a solution that any developer out there could use without talking to you physically.
Okay. So, you know, I think you alluded to this, and it's there's a perception that the institutional investors, just because of the dynamics and the metrics and their sorts of firms, they have to make larger bets and larger investments in a smaller number of companies these days. And if that's the case, I mean, do you see investors being more choosy or more picky about their investments, or more risk averse than they have been in the past with respect to the companies?
Yes. So let's talk a bit about why they are making the larger bets, right? So the larger bets, the numbers I showed you, was on game studios themselves, right? So it was average deal size on game studios from one year to the other. There's a fundamental shift that has happened in those 2 years, which is also dictating the larger investment size. And that shift is discovery is a lot more expensive. So majority of that larger investment that you're seeing is all going towards customer acquisition. And that is why we're seeing sort of this higher investment size for game studios. Now, the traction percentage, the traction level that different investors would look at, has probably gone up from the year before, right? Simply because the market is mature. There's different types of companies that are out there. Maybe some of them made some bad investments and that didn't quite pan out. So now they're trying to be a little smarter and wait a little bit longer and see a little bit more traction before they make a bet. That doesn't mean that the bets aren't happening. Because if you look at the total number of game investments, right, the dollar size in general, the drop from 2011 to 2012 has only been 40 million. Now, on an aggregate number in 2012 of 735 million, that's a drop in the bucket. So it's really about, you know, discovery is getting more expensive, just customer acquisition / discovery, which is why those investment sizes have been going up. And then to some extent, you know, this traction amount that VCs are looking for is probably a little bit higher than before if you're going after a space in which they've seen a lot of other companies, right? So if you're going after casual games, it's one of the things where the bar is much, much higher right now. So versus if you're going after a newer space where they didn't have to make investments in the year before.
Okay. So we have a question from one of our international listeners, and that's the great thing about webinars. We can reach out around the world and provide the kind of advice that, you know, there was a time when you had to be sitting right here in Silicon Valley or in San Francisco to get. This is a small studio in South America. They have a release game. They're working on the second, and they're wondering how can they approach the investment community here in the U.S. or in other countries, in fact. That'd be angels, VCs. When they're out of the country. Do you see some of this?
Well, so the first question would be, how have you actually performed on that first game in terms of traction, right? What's your user base like? What is your 7-day, 30-day retention like? What is your monetization like? I have noticed, especially with a lot of foreign teams, where folks are great game designers, they make a lot of fun games that I personally would like to play, those questions are just never asked, right? And since they're never asked, you know, maybe sometimes there's some angels involved or there's some government grants in place. Folks go from 1 game to 2 games to 3 games without actually thinking about what real traction is. Traction in this new world of more open app stores is not you shipping a game. Traction is the actual metrics you achieve. So before, the question of whether or not you should reach foreign or local investors is a secondary question. The first thing you need to answer is, what do you have to show as a company that makes them want to bet on you versus anyone else who's also talking to them?
Okay. So we have a listener with a transmedia game platform. They say they've been building it for over a decade, and I think the timing is right now to go out and seek funding. They develop the games, and now they're working on a video component, and they need to fund that. And they ask if you have any suggestions for them.
I would need to talk to you more one-on-one and better understand what this transmedia game platform is, because it's as a word that's been used quite a bit over the last several years to mean some very different things. So we need to take that offline, and we need to talk more one-on-one for me to be able to do justice to that question.
Right, and I would just remind the folks that the contact information for Yetizen is on the last slide. It's info@yetizen.com. I assume that's the best way to reach you. Is that right, Sam?
Yep, that sounds right.
Okay. So, you know, recently I had occasion to talk to a local VC about, because as I look at this presentation, I see that we're really talking about fairly early stage investments primarily, it seems. And I had occasion to talk to a local VC, and I asked him, I said, how do companies find you? I mean, how do early stage companies get funded? And he had a view. He said that virtually every company he knows that's ever gotten funded has done through networking and warm introductions. So I wonder if I could put that question to you, Santa, is what's the best way for companies that are looking for seed and Series A and maybe angel funding to go out and connect and meet investors in the gaming space?
So it very much is the network, right? Because what the network does for any investor is it basically lets them know, okay, this comes from a certain type of recommendation. I've seen deals that have come from this person before. They've been good. It's all through the networking and interest base, right? Now, what we do at Yetizen for our accelerator companies is that we not only have 8 VCs on our board, but we also have a couple hundred other individual angels, you know, VCs, strategic investors who are increasingly doing more stuff within games. And they come to us because they know that the Yetizen companies they're seeing have not only been vetted from over 700 or so applicants, and we've picked, you know, less than 10 from that, but they've also gone through a very intense mentorship program with over 150 mentors that are the cream of the crop of the game space. And at the same time, they have utilized our partnership deals and have some traction that they've been growing in the 3 months with us, while keeping in mind that they probably came to us with some amount of traction, right? Because we, as an accelerator, only play with companies that are sort of the efficiency and scale phase. We talk to a lot of folks and help them out at the earlier stage, but we also come in at the efficiency and scale phases. So that's our solution, right, which is for those that we choose to work with, we've built a very, very robust network of investors that when they see companies coming from us, they already know it has been vetted to a certain extent, it's grown to a certain point, and they're looking at that small subset of companies rather than everyone out there in the wild. So the answer is always networking, but other groups that you could affiliate yourself with, such as Yetizen or anything else you may have wherever you are in the world, that only helps you get a leg up versus all of those people who have not actually worked with groups that have really put some thinking behind it and created a system around it.
So it sounds like Yetizen, it provides mentorship, it vets the companies. You can put these companies in touch with other strategic alliances for partnership deals. And importantly, you have this pipeline of later stage investors that they can be passed along to. Is that right?
Yeah, so that's on the accelerator end. So not all companies that sort of come to the innovation lab get access to this. It's only for the accelerator companies. But if you are one of the lucky few that gets into the accelerator, this is definitely something that's available to you.
You know, I have a question. How about pitch sessions? You know, there seems to be one every night down here in Silicon Valley where companies are invited to pitch their plans or their businesses to groups of investors and maybe other entrepreneurs. Is that a useful use of time, do you think?
So in general, I'll answer from the gaming perspective, right? From a gaming standpoint, there are different types of investors that would be a fit than, say, for anything that's just consumer web, right? So when a lot of those pitch sessions, when I've been to them, there's, you know, usually an investor who has some expertise in enterprise, someone who's done a few things in consumer web, but there's very few gaming investors that actually are brought to the table because those guys know they're looking for something with a lot more traction that is later stage. So from a gaming standpoint, I haven't seen too many of those pitch sessions actually have, you know, angels or VCs that would be good from a game investment standpoint. And then I can speak from experience, a lot of our own sort of VCs on our board, you don't see them out publicly very much. They come into accelerator sessions when we sort of have them a few times a year, but they basically are focused on things that come to them from their own network and learning and meeting with a smaller subset of entrepreneurs that they think may have potential and they want to continue following for a period of time, rather than go to a lot of these public-facing session types of events. Now, I don't know if this is something unique only to gaming, because it is an industry where that first minimum viable slice before you can understand how that company is doing is much thicker. But at least in my experience, I haven't seen too many gaming investors out there at some of the sessions you're talking about.
Yeah, me either. So here we have a question from one of the listeners. He asked if there's a downside to being a generally tech-heavy artist and designer using something like Unity 3D or Corona to getting into the games for making simple, fun, free-to-play games. Is
there a downside to being a tech-heavy artist who's using someone else's
I'm sorry, tech-savvy artist and designer. Yeah, or getting into the games for making simple, fun, free-to-play games.
So that's interesting, because I was actually thinking about this morning. So right now, the beauty of all these tools that you're talking about, Unity, Corona, etc., means that you don't have to have a larger team or a team working for a long period of time to create those things someone else has already created. You don't have to reinvent the wheel, right? So that's the beauty of all of that. It allows you to get stuff done much faster. It allows you to go for the types of games that you particularly might think are an opportunity in the market. The only downside, which I actually saw in a post from Perry Tam, one of the mentors of Yeti Zen, who is actually the CEO and founder of Stormate, was that he was saying something about when he started back in 2009, a lot of these things did not exist. So his team had to organically create a lot of the sort of platforms and tools that they ended up using for their games in order to get stuff out quickly. Even he wishes that back then when he started, all these tools existed, because it would have made his life a lot easier, right? But that being said, he thinks that, hey, he has a lot more flexibility for where he needs to go. If he sees an opportunity in the market, he can quickly execute it with what they have in-house, rather than waiting for the Unities and Coronas of the world to actually add those feature sets and add those things within their own engines and platforms, right? But that's definitely, Stormate is a much bigger company right now. It's done quite well. It has this mindset of, wow, there's a lot of bigger competition coming in. How do I basically go for an opportunity I see in the market much faster than anyone else? But it's a much different stage of a company. So for him to have that concern makes sense. For you at your stage, and I'm guessing it's a bit of an earlier stage as a company, it is fine to be doing what you're doing. Just keep in mind a plan for how you're going to be scaling from here. How are you going to get to be a bigger company? And if at that point you need to revisit this question of, should I be creating certain things in-house that are a core competency? Definitely go for that. But right now it sounds like you might be at an earlier stage. So what you're doing right now is fine. It actually allows you to get a lot out there and figure out what is that product market fit for the types of games you're making.
Okay. So let me throw you one that might be a little bit out of left field. As you've probably been aware, there's a lot going on. I was interested to see that funding through Kickstarter and through some of the crowdsourcing sites hasn't been all that successful for games relative to other companies, I gather, other types of companies. And there's been a lot going on in the securities world about some new regimes coming along with regard to crowdfunding for equity. And although none of that has been implemented yet, there are some models out there that do have something very like a crowd-funded equity model for accredited investors, and we're seeing them pop up. And in fact, recently there was a couple weeks ago there have been some SEC announcements that make it much easier for investors to pool funds and make what really are crowdsourced investments. And I wonder if you have a view as to whether that's going to change the way that gaming companies will approach the investment community, whether that has significance. I know some people think because games have so much consumer affinity, or investor affinity, I should say, that the broader you can open up the investor base, the better it is for those sorts of companies. Do you think that's true for gaming? This is good news?
Two things on that. One, from an AngelList standpoint, I was speaking to a couple of gaming investors that actually do spend a lot of time at AngelList, and one of them told me that he's only ever done 2 investments from AngelList, and really all that AngelList helped him do was basically keep track of how that company was changing and improving over time. But at the end of the day, it was all his due diligence in person. They happen to also be a Silicon Valley company and a Silicon Valley investor that they basically, got to know each other, and that's really why he did the investment. So with that in mind, anything that helps more game startups showcase what it is that they've been doing, keep investors abreast of their progress, anything that improves the efficiency of that information transfer from our usual ways that we've been doing it, which is, emails and lots of coffee meetings and whatnot. I'm all for that. I think that, if it exists, I will definitely try it out. I'll definitely try it out with all of my startups and see what benefit it can bring, right? On the second hand, I think the affinity that a consumer really has with games, it came in this whole world where, there's a period of time in the game industry when a lot of big game publishers were really pushing their game designers towards their game consumers to sort of build a brand around that game designer. It was a way to help them market those games better. If you have that brand around you as a game designer, anything new that comes in, such as, hey, crowdfunding for equity, etc., people who know that brand are going to bet on it, right? But the thing that we sometimes forget every time we see a new tool is that you still need to do something to create that brand. Can you be smarter about it and just do it faster than the 12 years of Tim Schafer's career? No, maybe you can. Go for it. Try and build it. But it's still going to be a much less efficient process than if you went the traditional investor route and tried to meet and connect through networking and intros with a number of different types of investors.
Okay. The other thing that I think we've seen in the investment community generally is much more international investment. Is that true in gaming as well, or are we seeing more investors from other countries?
So the data sample that I had used for this presentation, when I was looking at that and seeing how many more of at least the first venture rounds were international, there was a very small, negligible number. It was about a handful or so. So I think that may also, so that's the first venture round. So from a venture round standpoint, there's not too much happening internationally. What I have noticed anecdotally, and I don't have exhaustive data to actually showcase this, is that Europe in particular, there are a lot of sort of micro VCs, angel type of individuals who come in early and then basically push the company to be a profit, cash flow focused business that succeeds and maybe does not need that venture round until much later. So I've seen a lot of that stuff individually sort of, those investors and bond with us, and we talk about whether those companies would be a match for Yeti Zen and taking them beyond that from a scaling standpoint. But I don't have data to showcase that because those investments were not the ones covered by the data set I used from Raymond James for this analysis.
Yeah, okay, I see. Anecdotally, I mean, what would you say without data though? I mean, do you have a sense of what the market's like? I mean, is that
I'd say there's like in the there's maybe 10 or 15 companies that I've seen that have been invested in by European micro VCs in the last year or two that I have personally come across.
Okay, interesting.
Although that was still rare, what I saw, which happened even more than that, was a smart strategy around branded games that were done by these companies in other countries. So, for example, one of our portfolio companies, Unusual Studios. Unusual Studios was founded by 2 guys. One guy, your quintessential console, tech game guy, and his founder was the big advertising guy who'd been doing it for like 20, 25 years. And he had even sold one of Spain's first agencies to McCann Erickson back in the day. So he really understood the brand world. When they decided to go to a game engine company, what the advertising founder did was that he basically went and found a beer brand, a Spanish beer brand, to basically pay for the development of the game. And in Spain, the beer brand owned the rights to the game. So that game in Spain is not a free-to-play game. It is a free game. There's no monetization hooks in it. The beer brand gets a lot of marketing around sports events, the sports game, right? And then, but the Unusual Studios continues to own the rights for that game everywhere else in the world. So from that, they had this full-fledged game that they then launched in the UK, launched in other places, were able to get a licensing deal with Real Madrid and are now making a Real Madrid game on mobile, right? So that strategy, it's a little bit harder, it requires a little bit more creativity, but that's more of what I've seen internationally than the angel investment. Like the 10 to 15 companies that I mentioned to you were represented by three investors, right? And of those three, one of them no longer does gaming investments anymore. So it's more of the creativity of the entrepreneurs trying to figure out how to make something happen in their markets without losing control, without losing equity. And sometimes it comes out of necessity because there's not too many investors out there, or if there are any investors, they tend to give you really, really bad deals that prevent the future growth of your company, prevent your liquidity, but at the same time prevent you from being able to raise money then in Silicon Valley.
Okay. So I want to remind the folks that if you have a question, we have a dialog box on your screen. We have an opportunity for you to get your question answered right here in real time. This webinar is being recorded. It will be available on royceuniversity.com, and the slides will also be posted. And you could also contact Sana directly at Yedizen. That's info@yedizen.com. So with that, I don't see any further questions. Do you have any closing words that you'd like to present before we sign off?
So yeah, I guess one last thought. And so in case you don't already know, I am from Pakistan. And in India and Pakistan, there's a word called Jugaad, right? And Jugaad, I'll do the polite definition here since I already mentioned BS in another context. But Jugaad means that when your back is against the wall, you have very little or no resources. How do you creatively come up with a solution that allows you not only survive, but actually take full advantage of that situation to grow and thrive, right? I've often joked internally at Yedizen that, this is, at the end of the day, this is what entrepreneurship is all about. It's not about whether you could, smartly finagle money from an investor, or, if you were able to figure out how to make the sort of the best game out there that basically inspired other people to want to give you money, or all of that other stuff that we just spent the last hour talking about. But it's about when you do have those hard situations and your back is against the wall, how do you get out of them in a creative way that also allows your company to thrive? And this is the essence of entrepreneurship to me. So, despite everything you might read in the media, there's only one of me that's saying game investments you should not be worried about. There's a lot of other stuff which is more about doom and gloom. At the end of the day, I hope you will remember, that principle of Jugaad and Jugaad your way into the next big gaming company tomorrow. And I'd love to meet you once you get to that point, or if you're on the way to that point, love to connect and see how we might be able to help.
Okay, well, thank you very much. And with that, this is Roger Royce of Royce Law Firm, and we are going to conclude the webinar. I want to thank you folks for tuning in, and thank you, Sana, for your presentation.
Thank you, Roger. Thanks for setting this up.
Goodbye.